This is Doug McIntyre. I'm the editor in chief at 24/7 Wall Street, and I'm here with Lee Jackson, who's our senior editor for finance, markets, the economy, and major corporations. We're going to try to unlock for you all the reasons that the economy is so strong right now, because there are an awful lot of people who say this doesn't make any sense. The recession that everybody said was coming never came, and how could everybody be so wrong? So, Lee, how was it that everybody was so wrong?
One thing that is interesting, and you're right, it was the recession that has never come based upon the inversion of the 2 and the 10-year, which has usually been a harbinger of inflation and of recession. There's been that inversion for almost 2 years. And we had a slight recession a couple of years ago. We did have two negative quarters, and that of GDP, and by definition, that is a recession. But yeah, it's been surprising because that recession indicator, which has worked for decades, at least so far, hasn't spelled a recession.
Part of this is that corporate earnings in general have been stronger than expected. And I don't just mean the mega tech cap stocks, but, you know, if you look at a typical S&P 500 company, and you look what was announced Q4 2023, and full year, many companies did way better than people thought they would.
Well, also there has been huge layoffs across the industry. Now, granted, most of those seem to be in big tech, but that's how a lot of people are trying to, I think, to improve their balance sheet and improve their earnings, is they're laying people off. So they're probably doing some AI related assistance, and they're somehow making the earnings numbers, even if the actual gross revenues are commiserate with what Wall Street expected.
One of the fascinating things to me is you do read about layoffs, and obviously the layoffs you read about are at big branded companies, but unemployment has pretty much hung on around the 3.6, 3.7 level. And you've seen an awful lot of months where the number of jobs added was, 200,000 plus. And everybody you talk to says this just can't keep going. But it does. Why does it keep going?
Well, the numbers always seem like they're somewhat hard to put a lot of faith in, especially when you look at the January employment number was just gigantic. It was like 350,000 jobs, and way above what they estimated. And then, of course, recently they said, oh, it wasn't really that much. We have to reduce that number by 125,000. I'm like, that's a pretty big error or a pretty big adjustment. But yeah, I think it is interesting that it has continued to stay strong. Now, so many jobs were lost during the pandemic that a lot of it, the administration's trying to point at huge job gains, but when you dig a deep hole and then you fill it back in, you're not really adding jobs. You're just, people are going back to work. So I think that could be part of it.
Something else that people thought was going to hurt the economy was high interest rates. It's like the Fed's going to hit the brakes, not tap them, because inflation, as you know, was getting close to double digits. And so, the Fed got quite aggressive. It does not seem
to say the least, yeah.
Well, it didn't. Why? It has not hurt the economy at all.
I don't know. We traded at a very low Fed funds level of zero forever, and they raised them pretty fast from a historical standpoint. And it's kind of interesting that it's held, funds have held at this 5.25, 5.5 level now since last fall. And clearly they're not going to go any higher. But I think the big concern that Chairman Powell has is that if he starts to cut rates and the stock market takes off even more, he's going to deal with a potential 2008, 2009 implosion of the market or a 2000s .com implosion. So he's kind of been boxed in and painted into a corner.
Well, I have a theory. People say, wow, rates have gone up and up and up, right? But rates where they are now are not high. I know they're high if you sort of didn't spend any time alive outside the last decade. But is there a chance that in reality, rates are not high enough to affect the economy and wouldn't be at any point in history? They're just not high enough.
No, and you're right. I mean, rates are now back to about where they were 20 years ago, maybe a little bit longer. At the turn of the millennium, CD rates at a money center bank were not, this was for longer paper, were 5-6%. But, historically, a 7% mortgage and 5 to 5.5 Fed funds is not historically high. It's kind of in the normal ballpark, but you're right. After a decade of zero, it seems high.
How much of a role do you think low energy prices have played in the fact that we have sort of remained in a recovery that seems to go on forever? I mean, look, there right after Russia invaded Ukraine, you saw this big bump in crude above $100. Gas went to $5, but it didn't last long. It was really a couple months, and gas was on its way south pretty sharply. I think Gas Buddy said right now the average cost of a gallon of regular nationwide's about $3.30, which historically it's not a bad price.
Well, and again, gas prices always vary so much. Like where I am here in Louisiana, they just spiked a little bit recently, but they were under $3 just a couple of weeks ago. And when you compare Louisiana and Texas and other southern states to, say, California, where there's so much added on tax, it is more of a burden on the average person. So if energy rates, and not just gasoline, but natural gas and other energy prices skyrocket, that's going to be bad for the economy for sure.
The economy will get hit, but
hammered.
If you look, let's go back a month or so when crude was maybe $72.
Mm-hmm.
I mean, at that point, the airline industry is getting helped. Petrochemical prices, a lot of those, trucking is getting helped. People's home heating oil bills in general are lower than they traditionally are. Gasoline prices are low. That's a pretty heavy set of braces underneath GDP.
Yeah, it absolutely is. Sure. And I think that's the thing that could get knocked out if prices do go higher across the board. That could be the economy's weakness, for lack of a better term.
Now, I'm watching the real estate market right now, and to me, there are two things notable about it. The first one is home prices are still going up, but, that's not odd. The second one is that there are almost no homes for sale. I mean, if you look at transactions, particularly existing home transactions, they're very low because people who've got that 3% rate that they got a decade ago.
They don't want to let that go.
They don't want to give that up, especially if they're going to move into another home. But the low transactions in residential real estate do not seem to have hurt the economy at all.
No, it doesn't. And it's interesting because, real estate brokers have had their way with buyers forever. And, that's starting to be scrutinized heavily. And they're going to have to come to an agreement to get rid of that 5% and 6% commission rate. And it's going to be interesting. Like we have discussed in the past, the big builders, they build way out. They have to go farther and farther out, as they have in Dallas and other major, metropolitan areas. And the Toll Brothers of this world that do build bigger and more expensive homes, they may not see the kind of movement into those that they have in the last couple of years. So it's going to prove to be interesting to see, how this all shakes out. But the main point that you made that's so correct is if you have a mortgage that you got 2 and 2.5 years ago, you're not walking away from that.
The thing that worries me the most is labor costs when I look towards the end of this year and the general, GDP. The UAW did very, very well with the car companies, which is going to hurt earnings. It helps the income of those people, hurts the earnings at, what used to be called the big three very badly. You had a UPS settlement, very expensive.
Very expensive.
For UPS. You now have at Starbucks, the company has finally said, we're going to come to the table. We don't want to keep going back to the National Labor Relations Board and fighting with the union over whether we treated them inappropriately. You now have unions starting to move into the Amazon warehousing areas. So you could have several 100,000 more jobs unionized in the next year.
Oh, I don't think there's a question about it, because workers from numerous industries are seeing those huge gains that you just mentioned. To your point, the UAW just got huge numbers for their employees, as did UPS. And that's what everybody else is seeing. They're like, hey, if they can get it, we can get it. And that is going to be something that could be a toss up for major corporations for not only the rest of this year, but in the coming years.
So Chairman Powell could see the following happen. He could see wages going like this while he's sending rates this way. What's the outcome of that? You're seeing big inflation in wages, not today, but very possibly within the next year. And rates are coming down. Does that mean that the Fed sits at the end of the year and says, oops, we wish we hadn't cut those rates?
Well, I think that's what they're going to wrestle with. And there's a very good possibility, as we've discussed in the past, that they're almost the dot plot, or the plot that shows the increase in funds, has been shifting a lot. And everybody was sure there was going to be a June cut. But how does he cut rates into a raging stock market, which will only push it higher? And the last thing that he wants is a total collapse of the stock market, because basically that hurts everybody. Because even if you're not a big stock investor yourself, it's in your pension or it's in your corporate 401k, and he doesn't want to see all those gains evaporate, like they did in 2008 and 2009. Yeah.
Well, good conversation about this. One of the things to watch for always when it comes to the economy is earnings. New earnings season starts in 5 6 weeks?
Yeah, only a couple of weeks out.
The early guys, right? But probably the heavy hitters 5 weeks out will start to see that.
Yeah. Mm-hmm.
That will be a very good bellwether for what's going on with the economy, even better in some ways than oil prices or homes sold each month. So Lee and I will be back when we're in the heat of earnings seasons to talk about this again.
Well, and we'll also be back to see just exactly what rates do as we get into April, and there's a longer look down the road. Absolutely.
Yeah, there is. Take care of yourself.
Good to talk to you, Doug.